Hi friends, good morning, good afternoon and good evening. One more time from Babu Muralidharan and Company Limited coaching class. In the previous class, we discussed about three types of accounts: real account, personal account and nominal account. Real account are the ones which help in revenue generation, like for example, fixed assets, land and buildings, cash and plant and machinery, etc. And personal accounts relates to natural or artificial persons like Babu Muralidharan Company. It's an artificial person, and ABC Limited, XYZ Limited, or any names like Babu Muralidharan. And the third set of accounts are called nominal accounts, which are basically anything that relates to expenses and income. For example, sales, commission earned as incomes, and salaries, wages, etc. from the depreciation point of view. So these are all called nominal accounts. Now in this class, let's go through what is the three golden rules. Let me type it here. The first rule for real account, it's debit what comes in and credit what goes out. We'll discuss about it in detail. Let's first by heart this golden rule because this is going to be the basics for future classes, and anyone who wants to do good in accounts should actually know the three golden rules by heart. So let me repeat it one more time. Real account golden rule is debit what comes in and credit what goes out. Next account is personal account. The golden rule for personal account is debit the receiver, credit the giver. One more time, debit the receiver, credit the giver. The third account is nominal account, and the golden rule is debit all expenses and losses, credit all incomes and gains. Let's repeat it again. Debit all expenses and losses, credit all incomes and gains. So the three golden rules are real account, which says debit what comes in, credit what goes out. Personal account rule is debit the receiver and credit the giver. Nominal account rule is debit all expenses and losses, credit all incomes and gains. Let's now take it up with an example, right? What we discuss is purchase of fixed assets or sale of, let me put it here, sale of fixed assets are all part of the real accounts, right? Similarly, anything transaction related to an individual, say purchase of goods from XYZ Limited and payment of salaries. Right? Let's take these examples and illustrate what actually these accounts represent. The first example is purchase of fixed assets. What actually happens? Purchase of fixed assets. What actually happens? Asset comes in, right? What actually goes out from us? Cash goes out, right? So the rule is much more simple here. And when we say asset, it's real account. When we say cash, you said it's real account, right? So the rule is debit fixed assets account, credit what goes out, cash, cash account. Let's take another example. Same purchase of fixed assets from XYZ Limited. In this case, we are purchasing asset from XYZ Limited. Here, what comes in? Again, asset comes in, because when we purchase, we are bringing in a new asset. So, asset comes in. Then, are we paying by cash? No, we are purchasing it from XYZ Limited. So, the second rule comes in. XYZ Limited. Here it is real account, and here it is personal account. So, the journal entry for this will be debit fixed assets, because debit what comes in? Fixed assets. Fixed assets account. And in this case, credit the giver, because XYZ Limited is giving the asset on credit basis. Here in the first example, we said that purchase of a fixed assets by cash. So cash goes account. So we credited cash. But in this case, purchase of fixed assets from XYZ Limited. XYZ Limited being an artificial person, the personal account rule comes in. Credit the giver. So credit XYZ Limited account. Am I clear? The third journal entry, what we saw, third transaction, what we saw is payment of salaries. Let's take it, sir. Payment of salaries. Here, what actually we are incurring? We are incurring an expense. What type of expense it is? Salaries and wages. Salaries. And this is paid to, either it can be payment of salaries by cash. So what goes out? See what is we are incurring the expense. So the expenses comes under nominal account. So rule is debit all expenses and losses, which means that debit salaries account, and by cash credit cash account. Are we clear so far?